What if I told you that Warren Buffett, one of the greatest investors of all time, is quietly preparing for a major stock market downturn? He's sitting on a record-breaking $325 billion in cash, and when Buffett makes a move like this, it's not random, it's calculated. So what does he know that most investors don't? And more importantly, what should you do right now to protect and even grow your wealth? By the end of this video, you'll understand why Buffett is holding so much cash. What key signs are pointing to a stock market correction? How you can position yourself to profit when the market dips? Stay tuned, because history shows that market crashes create some of the biggest investing opportunities ever. Warren Buffett has always preached long-term investing, but he's also famous for striking deals when everyone else is panicking. Think back to 2008. The market was in free fall, and Buffett made legendary investments in Goldman Sachs and Bank of America, turning billions in profit when the dust settled. Fast forward to 2024 and he's doing something that should make every investor pay attention, hoarding more cash than ever. But why? Is a market crash coming? Or is he just being cautious? Let's break it down. Before we dive into Buffett's strategy, let's quickly clarify what a market correction actually is. A correction is when the stock market drops 10% or more from recent highs. It's a healthy part of the market cycle, but if the drop continues beyond 20%, that's what we call a bear market, a more prolonged and painful decline. The S&P 500 is currently very overvalued, with a Shiller PE ratio of 37, far above historical averages. That alone doesn't guarantee a correction, but when valuations stretch this far, it doesn't take much to trigger a sell-off. So what could push the market over the edge? Buffett knows that markets don't just crash out of nowhere, there's always a trigger. Here are some major red flags right now. U.S. election uncertainty. Markets hate uncertainty, and depending on who wins, we could see shifts in tax policies, regulations, or trade agreements. Geopolitical tensions. Ongoing conflicts in Ukraine and the Middle East are major risks. If tensions escalate, global markets could react violently. Persistent inflation and interest rates. The Fed has kept rates high to fight inflation, but if inflation spikes again, expect another wave of volatility. U.S. debt and recession fears. The U.S. government's debt is at record levels. If economic growth slows or the debt ceiling debate flares up again, it could shake investor confidence. Buffett isn't panicking, but he's prepared. Now let's get to the big question. Why is Buffett sitting on so much cash? Here's what we know. He sees fewer attractive investment opportunities. Buffett has always said, price is what you pay, value is what you get. Right now, he believes stocks are too expensive and isn't willing to overpay. 2. He's waiting for better deals. Buffett loves a bargain. He knows that in a market downturn, panic selling creates once-in-a-decade opportunities to scoop up great companies at a discount. 3. He wants flexibility. Holding cash gives him the ability to move fast when an opportunity arises. While most investors panic during crashes, Buffett is ready to strike. Think about it. If Buffett, the king of long-term investing, is being cautious, shouldn't we pay attention? So what can you do to navigate this market uncertainty? 1. Keep a watch list. Make a list of high-quality stocks you'd love to own, at the right price. When a correction hits, you'll already know what to buy. 2. Have cash ready. You don't need $325 billion, but having some cash on the sidelines gives you the power to buy when others panic. 3. Stay diversified. Don't put all your money in one stock or sector. Spread your investments across different industries to reduce risk. 4. Focus on long-term investing. Timing the market is nearly impossible. Instead, think like Buffett, look for undervalued assets and hold for the long haul. In fact, let me share a quick personal example. During the COVID market crash in 2020, I saw Google and Meta stock drop by nearly 40%. Instead of panicking, I bought in. Fast forward a couple of years, and those investments skyrocketed, giving me some of the best returns I've ever made. That's exactly how Buffett operates. When others are fearful, he gets greedy, and it pays off. Drop a comment below if you've ever made a great investment during a downturn. I'd love to hear your story. If you want to level up your investing skills and be fully prepared for the next market correction, check out my new money education course, where I break down proven investment strategies in detail. For a limited time, use code BF24 to get 30% off. The link is in the description, but don't wait too long because the discount won't last forever. Let's quickly recap. Warren Buffett is holding $325 billion in cash, a sign that he's waiting for better opportunities. The stock market is overvalued, and major risks like inflation, geopolitical tensions, and election uncertainty could trigger a correction. The best way to prepare is to keep a watch list, hold some cash, and think long-term like Buffett. So, what do you think? Is Buffett right to be cautious, or is the market correction overhyped? Let me know in the comments. And if you found this helpful, hit that like button and subscribe for more investing insights. Check out this next video where I break down the best stocks to buy during a crash. You won't want to miss it.